Hi, everybody. Welcome to UFile's Facebook Live event. I'm Ida Celli, your co host with Gerry Vittoratos today. How are you, Gerry?
Well, I'm pretty good. Tired, middle of tax season, but I think we're seeing the light at the end of the tunnel. We got what, about a month and a half left, right? Something like that.
Exactly.
So we're almost there. We're almost at the end. But then again, we live for tax season, right? That's what we do here at UFile.
I
We
don't
live
know.
for it.
I can't wait for it to be over sometimes. It's like there's just so many questions. Anyways, we changed a little bit the format today.
Yeah.
Gerry and I went to our support team and we asked what was the most asked questions uh, to the support team. So we're going to cover quickly the topics of employment expenses, unused RSP contribution of prior years, home buyers plan, the T4A box 48, as well as for Quebec, the Schedule J. And Gerry will let us know if there's an equivalent for the federal also at the same time, just to for that particular um, deduction. So afterwards, we will take questions. So when you have, just wait for us to answer some of these questions before you can post your questions in the comments, and let us know if you like this format too at the end. So Gerry, let's start with the easiest one, the RSP. We know we
hmm
have a YouTube video on our channel. However, can you simply quickly go over where we find the where we enter the previous contributions, where can they be found, and how we complete afterwards the home buyers plan.
Okay, perfect. So let's start with the questions, which, by the way, the first what I'm going to show right now, as you mentioned, is on our YouTube page, right? So we on our YouTube page we have a lot of how-to videos on how to do certain things within the software. So you could go and consult there as well. So I'm just going to hide you for 2 seconds, and I'm going to go ahead and share my screen. So let's have a look at, for example, the RSP contributions. So to enter your RSP contributions and limits, including your carry forwards from the previous years, within your left-hand navigator here within UFile, you've got a section that is always generated by default, which we call RSP contributions and limits. So this section should already be there as long as you're within the age range of being eligible to contribute to your RSP. Okay, and even after 71, actually, you can still have a limit, right? If you've over contributed at the final year when you're at 71. Okay, so now if you don't notice the section, then it's a simple case of going to the interview setup, which is the nerve center of the program, and then simply scrolling down to the common tax deduction section, and then you simply tick the box next to RSP, home buyers plan, et cetera, et cetera. Once you tick that box, always make sure to click next at the bottom of the page, and the program will add that section to your left-hand navigator. So under the RSP contributions section over here, first things first, you enter what your limit is as per the government. So this would be either notice of assessment or something along those lines. Okay, so there's two places you could get your limit amount, which would be your notice of assessment, or you go directly into your My Account portal, the CRA, and usually they will publish the amount, okay, that you're entitled to deduct on your RSP. So you simply plug that amount in there in this case, and then from there you've got your contributions for the current contribution year, which would be March to December 2013, and first 60 days of 2024, 2013, sorry, 2023, and first 60 days of 2024. Okay, the key is your contribution period for the tax year is actually ordinarily the 2nd of March of the year of the previous year to the 1st of March of the current year. Okay, that's usually your contribution period. If you make any contributions in the first 60 days, the first 60 days of 2023, for example, you have to claim those, you have to declare them in your 2022 tax return. That's how it works, okay? Even though they're in the calendar year, those first 60 days, you declare them in the previous year, and then you can bring them forward to the following year and use them then, okay? But they still have to be declared for the previous year. And that's what you indicate here under contributions RSP, March to December, and first 60 days 2024. Be mindful of the fact that the first 60 days 2024 was February 29th was a deadline this year because we have a leap year this year. So that's what the first 60 days would be in that case. And you simply plug in your amounts. Okay, so from here, From here, um, you enter your amounts. If you want to limit the amount that you want to claim of RSP contribution, because you're not required to deduct it, you can bring it forward to the following year. Okay, you can simply plug in the amount that you would like to put in, you would like to deduct under the RSP deduction to use. Otherwise, the program will simply max out your deduction and claim the full amount in that case. Okay, so this is what it would be for your RSP contributions. Okay, and your unused contributions you enter within here. Be mindful of the fact that, again, your first 60 days of 2023 had to have been declared in the previous year in order for them to be unused. You cannot simply claim them in the current year. Okay, that's how it works. Now, for the home buyers plan, you've got, again, a section that generates by default within the left-hand navigator called HPP, FHSA, and other plans. Okay. And you simply click in that area there. Once you click on that, you've got the section here for home buyers plan. Simply click on the plus sign right there, and then from here you can enter whatever your balance is at the end of the year. Usually, your notice of assessment will indicate this, or again, you could go to the My Account portal of the CRA and you have access to that information. And what is really required, the really important amount, is the amount that should be repaid as per, again, the CRA notice of assessment or the portal itself. Or from there, you simply go to contribute, and then from there, you designate the amount of your RSP contributions you made during the year within this particular box right there. Okay, so that's essentially where you would indicate it here. Okay, so first you have to enter your contributions within your RSP contribution section right there. Okay. And finally, you simply designate the RSP contribution that you made within the RSP contribution section in the contribution designated as your 2023 HPP repayment. Okay? So Ida, so I did the first two, home buyers plan and RSP. What are some of the other ones that we could do? Perfect. All right. So in this case, for the interview, so for the employment expenses, which includes, by the way, actually, let me just answer one person here who said, "Can I see this as a recording?" I'm working. The answer is yes. Okay. Once the live session is done, it'll be posted as a recording on our Facebook page. Okay. So no problem there. So under the interview setup section here, you've got the section within employment and other benefits called employment expenses. So simply tick the box right there under employment expenses, and then you click next, and the employment expenses section will now appear in your left-hand navigator. Okay, now employment expenses includes your home office expenses. So most of those who are viewing us right now, okay, are essentially usually in a home office. All right. So in this case, you would claim it under employment expenses. So your home office expenses are considered employment expenses on your return. Okay. So from here, you choose between commission income employee and salary employee in this case. Okay, so you choose between the two, either commission income or salary employee. Now, for most of you, it'll be a salaried employee. Unless you are collecting commission as a salesperson, for example, then you'd be considered commission income employee. Now, what's the distinction between the two is the fact that when you are collecting commissions, if you're considered a commission income employee, you can actually claim more types of expenses in this case than what you can claim under a salaried employee. Okay, so there are more types. However, the catch to that is that you will be capped by your commission income that you gain during the year. Okay, so you cannot go above and beyond your commission income for a lot of those expenses, a lot of those extra expenses that you're entitled to as a commission income employee versus a salaried employee. While a salaried employee, you can, in this case, under salaried employee, you can you can claim less expenses, but you are capped by your salary in this case, by your employment income. So for the most of you, it would be salary income in this case. So I simply click on salary, and then you could claim general employment expenses. And remember, the concept of employment expenses is that you have paid for expenses to perform your duties, your job, and your employer has not reimbursed you for those expenses. Okay, that's essentially how that works. Okay, so if your employer has not reimbursed you, you can now claim these expenses that you've incurred in order to perform your job duties as an employment expense. Okay, now in order to be able to claim employment expenses, including home office expenses, you need, in this case, to have a certificate by your employer, which we call the conditions of employment, and that's the T2200 is the form, or we commonly refer to it as the T2200. Okay, in tax circles. If you're in Quebec, you also have an equivalent form of this, which is the TP 64.3. So this form has to be completed by your employer, has to be signed off by your employer in order for you to be able to claim your employment expenses, including home office expenses. Okay, now you do have some general expenses you can claim. Okay, this for a salaried employee who's working from home, it's rare you're going to have general expenses. Usually this would be more reserved for somebody who's a commissioning income employee a lot of times, but you do have some choices of general expenditures that you can claim over here, okay, within these sections. You can also claim motor vehicle expenses if, for example, you're using your personal vehicle in order to perform your job duties, in this case, and you have the option between a purchased vehicle or a leased passenger vehicle. Okay, so those are the two options that you have over there. So if you're leasing your vehicle, you can deduct your leasing expenses. If you purchase your vehicle, you can claim your vehicle under a capital expense that we call, which is basically you are depreciating your vehicle based on a certain percentage that the CRA allows. Okay, the federal government allows in order for you to deduct. So, for example, for gasoline vehicles, you can claim 30% of the value of the vehicle every single year as an expense, and that's what we call the depreciation expense, or what the government calls capital cost allowance, or CCA for short. Okay, so you choose the class of the vehicle that you have, depending which one. And then from there, you could also claim general expenses, current expenditures on your vehicle, like fuel, like, for example, maintenance and repairs, insurance premiums, and license and registration, okay, and so on and so forth. So these are the types of expenses that you can claim for your vehicle. Now, the most common example for most of you who are watching this right now, most of you that are watching right now would be, in this case, home office expenses. That would be the most common example of what you can use, what you can claim as employment expenses. So under home office, the first thing you have to do is determine the square footage of your home office vis-a-vis the rest of your home. Okay, so versus the rest of your home. So if, for example, the room that your dedicated home office is in represents 10%, of the of the space of the home, then you could only claim 10% of the allowable expenses. Okay, so what you would indicate here in the software is the opposite. So, for example, if you determine 10% is what represents your home office, then you're entering 90%, which is the personal portion of your home. From there, you enter the full expenditures, the total expenditures that you have that are allowable, which is ordinarily utilities, home internet, and rent. Okay, that's what would be essentially what would be allowed for salaried employees. If you're a commission income employee, you can claim a few more. For example, if you own your home as a commission income employee, you can claim your property insurance, and you could also claim a portion of your property taxes as well. Okay, so that's only if you're a commission income employee. Okay, that's essentially how that would work. You enter the total expenditures in this case, and the program will prorate the expenses based on the percentage that you indicated, that is the personal percentage of your home. So again, you have to determine what the business portion of your home is that you're using, that is dedicated for your home office. Okay, so that's a very important calculation that you have to do. So that's employment expenses. Let's have a look now at T4A boxes 20 or 48, or 28 as well, when it comes to self-employment income. So, for example, you could be a contractor, and you get a slip from your customer, that essentially where you've done some work for them, in this case. So what you can do what you can do in that case is that type of income is considered business income. So you have to input it as business income, but there's a procedure that you would have to follow, which, by the way, we have on our YouTube page. So what I'm about to show you, this procedure is found on our YouTube page. And I also saw a question about the digital news subscription. We also have a video about this on our YouTube page on how to claim the digital news subscription. We're also going to be adding more videos, more how-to videos on UFile within our YouTube page. So go ahead and follow our YouTube, subscribe to our YouTube page, and we're going to be posting a bunch of videos there on top of the existing videos that we have, including podcasts that we do as well, and some nice what's called the tax topic videos as well. So go ahead and subscribe to our YouTube page directly. After go ahead and subscribe to it, and you'll get notifications for all these future videos that we're about to post. So T4A, box 20 or 28 or 48. First things first, you've got, we could add the T4A within the pension and other income section within the interview setup section in our left-hand navigator. You click on next. From there, you've got the section here for the T4A. On the page, as you select it, on the page to the right, you've got T4A, pension, retirement, and other income. And then once you're there, you'll notice right here, you've got your boxes 20 and 48 right there. Okay, so this would be like contractual payments that you would have. You would input whatever amount that you would have within those boxes in your box 20 or your box 48, but then you have to also report that amount in your business income. Otherwise, the program will not allow you to transmit the return, to the CRA. Okay, so from here, once you've done that, we go back to the interview setup. And now we're going to add self-employment income in the interview setup. So here you've got the self-employment section. You tick the box next to self-employed business income. We click next at the bottom of the page. And then from there, we go to self-employment income right there. You choose which one is relevant to you, whether it's a business or a professional income or commission income. Let's say commission in my case, that's what I chose. And then from here, under the income and expenses section, you will notice here you've got the box number for 20, 28, and 48. So you can simply enter here box 20 right there, and then you simply re-enter that same amount that you had in your T4A. Again, all this is in our YouTube page. Okay, there's no need in this case there's no need in this case, you could view this video. You could also view it on our YouTube page. We have everything there. A lot of instructional videos are there as well on our YouTube page. So I think that about covers the common questions that we have.
Yeah,
So
there's
now
only the scheduled J, or do you want to keep that for the end?
we'll keep that for the end because I think the
Okay.
majority of people that are watching us are not necessarily from Quebec, right? So let's have a look at the question.
Okay, so let's start with the first one, Mark.
Perfect.
I'm using UFile Online for my personal 2023 tax income. I retired in 23 and my employer transferred my severance and unused vacation days to my RSP.
Mhm.
For example, my T4 has $1,000 in box 67,
None.
non-eligible for
Okay.
retiring allowance,
Yeah.
and box 14 has
Include the
included a
$1,000
thousand
and
unused
used.
vacation
Yeah.
payout. I have a bank receipt for the employer transferred of $2,000 to my RSP. My question is, how do I apply this $2,000 transfer receipt to reduce my net tax payable?
Okay, so that would be a retiring allowance that you got, but that would be an eligible retiring allowance. I don't know why they would stick it in non-eligible retiring allowance. I find that very bizarre. Um, I find that extremely bizarre. Now, in this case, okay, so you got okay, so personal tax. I retired thousand away. My employer transferred my several unused days to my RSP. For example, my box T had $1,000 and a box 14 as the included. I have a bank receipt. Okay, so then you have 1,000 for your vacation and 1,000 for your whatever RSP. No, then your severance. I find that very bizarre. They would use The unused. Well, the only way in this case, because it's non-eligible, box 67 would be non-eligible. Then what you would do is simply plug it into your RSP contribution receipts. That's all. That's where you would put it. You just put it directly into the RSP section. In this case, you would not use the eligible retiring allowance direct transfer in this case because you essentially collected it and you transferred it. That's how, because it's considered a non-eligible retiring allowance. So just plug it in as a run-the-mill RSP contribution. It's as simple as that. Okay, so we go to the next
Okay,
one.
next question. Anna, box 40 of T4 and box L of the relevant one are different amounts. Is it something
Yeah.
I should worry about? Is it the first time that they were different amounts?
Okay, so Anna, you don't have to worry about it necessarily. What's called that amount is already included in your box 14 on the federal and box A in Quebec, so it's already been accounted for. Okay, so there's no worry there as far as if you declare different amounts. But remember that U file does allow you to put in the different amount between the federal and Quebec. When you're going to enter your box 40 first, there's a little icon next to box 40 which looks like a maple leaf with a fleur de lis inside the maple leaf. Click on it. The program's going to give you box L right next to box 40. All you have to do is simply plug in the different amount from box L and you're good. But just remember that 40 and L, they're just information. Those numbers are already included in your box A and your box 14. Now, it is possible you have differences between federal and Quebec because there are certain amounts that are handled differently between federal and Quebec. So it's not that uncommon to have different amounts between them. So you don't have to worry about it.
Okay, she's also asking, our employer offered dental benefits. Do I select the choice from the drop-down menu according to the number in the box 45 on the T4?
Box 45. I'm not that familiar with that box. Let me see
Oh, it's
here.
something new this year.
Oh, right. Yeah, yeah, yeah. Okay. Okay, I see. Yeah, yeah. Employer offered the benefits. Honestly, that's actually information. I don't even think it's something that actually affects the return. Do I select the choice from the drop down menu according to the number? Yes, that's what you would do. Yeah, that's exactly right, Anna. That's exactly what you would do.
Okay, next question is from Ayako.
Mhm.
If you have if if I have rental income and I want to defer the expenses, where do I do that?
You can't really defer expenses. The only expense you could defer is capital cost allowance, which would be the depreciation on the rental building or any equipment that's within the rental that you offer within the rental building. But the current expenditures themselves you cannot defer. You have to claim them. But the difference is if you're creating a loss on your rental on current expenditures, you don't lose that loss. You actually deduct it against your other income, so it's not lost. If your net rental income is negative, if you have a loss, in other words, and that loss is created by your current expenditures, the loss is not lost. You can simply apply it against your other income because it's considered to the government as a non-capital loss, and non-capital losses you can apply against any other income on your return.
All right, the next question is from Noor. I have two questions if you don't mind. First
Yeah.
question, can I claim what I have paid for hearing aid for myself, which is
Mhm.
$3,587, and for my children, orthodontist, vision, and student
Yeah.
presto? If yes, which section can I claim these expenses? Can you answer the
Yeah.
first one?
So
Then
that
we'll
one
go.
is, yeah, it's very quick. It's medical expenses. Very simple. That's considered an eligible medical expense. So you will go into medical expenses and just claim the receipts, plug in your receipts there.
Okay, second question. Does the money that I receive from work insurance benefit considered income? They paid me $150 per day for each day I stayed in the hospital around 2 months.
Ordinarily, yes, they would be considered, and normally your work insurance will emit a slip. Either they're going to include it in your T4, or they're going to give you a T4A that's going to reflect that insurance. So yes, it would be.
Okay, next one is Joy. Do we
Mhm.
need to file for the climate action incentive? If we have to, where do we enter it?
Okay, the answer is yes. You would have to. Well, you have to file a return to get it. Okay, that's number one. Now, the only time I believe that you would produce a schedule would be to indicate whether you are in. You're not in a metropolitan area. In other words, let me see here. I'm in Ontario. Um, I've got my client in Ontario, and I think there is in this section. Yeah. So under the CRA questions section, you're going to have a question there as to whether you live in an urban area or in a rural area. Okay. So you simply choose. You're either choosing either you are in a rural area or you choose the metropolitan area that you live in. Okay. And then once you choose that, you if you're in a rural area, you get a supplemental amount. Okay, for the climate action instead, which now I think is called um, the carbon rebate, right? I think the government has rebranded it now, and they call it the carbon reduction rebate or something like that. Anyways, I don't remember. They've changed the name 3 times already. This is like the third time they've changed the name. So in this case, so essentially that's how it would work. So you just have to indicate whether you're in a rural area or in an urban area. That's the only information you do. You do that in the CRA questions section of UFile. File your return, and that's all you need to do, and you're going to claim it automatically.
Okay, for the next question, it's the user who says he's first time using UFile. I will give you the link to our YouTube page. There is a few videos that I really recommend is how to go through the interview screen that will help you understand how to complete the return. All right. Since you don't have a specific questions, we'll carry on. Okay, Ravi, except for a leap year, when the period ends on February
I think he
20th.
was just
Oh,
answering when I was
yeah, he was
doing the
answering
RSP
somebody else.
portion. Yeah,
Yeah.
yeah, yeah.
Okay, Dave, for the home
Yes.
office expense, I lived in two locations. How do I enter this in the T7777?
You
I
would
think
you
I
would
have both.
you would basically lump the two, right? I mean that's it, but on a prorated basis, right? That's essentially what you would do. There's no way to enter like two of them in this case. It's only one home office expense, so you would basically prorate the expenses or whatever you obviously you don't even need to prorate because you only paid a certain amount up to the point where you moved. So you would lump the two essentially together. The only thing you have to be careful of is you have to take an average of your home office area. In this case, you have to take an average between the two at that point.
Okay, next question is from Defrost. Schedule H is not generated this year, probably because the care receiver lived with me until April,
April.
moved to a private residence, and later to a public one in July. But I
Mhm.
still took care of all her uncovered needs for
Yep.
the whole
Oh,
year.
yeah.
So how should all of this situation be reported, and where must the amounts paid for the rent in those residents be entered?
Okay. Yeah. Unfortunately, you would lose out on Schedule H because you don't meet the 365 consecutive days, where at least 183 of them are in the current year. So automatically, you're not eligible. And we're talking about Quebec. For those of who are just thinking, looking at us cross-eyed, saying, "Where the hell is that Schedule H?" We're talking about Quebec in this case. So unfortunately, yeah, you do lose out on that. Now, if the residence is what the government, what we call a CHSLD in French, which is a 24-hour care residence, then the fees you pay to the residents are claimed as a medical expense, okay, on the return. All right. Now, if the residence, though, is a private residence, which is more independent, meaning that the person is more independent, then you will go through the Schedule J option in this case. And for that one, it's simple. When you're completing the entry for that person, and they're over 70, the program is going to generate automatically underneath towards the bottom of the left-hand navigator. It's going to generate automatically a senior, what's called senior maintenance or whatever it's called. Let me just bring it up here on my file and make my client resident of Quebec. Just give me 1 second and I'll tell you now what the section that will appear will be. It'll be called senior home support. There you go. Sorry. So it'll be senior home support. Now, ordinarily, the residents will produce a form where the person who resides in that residence can claim this credit, which is a refundable credit, in advance. Okay, so this again would be an independent private residence, but I think you mentioned that it's a public residence in this case. Later to a public one in July. So that's likely that's a CHSLD. I'm almost positive in this case. So that would mean it's medical expense purely. That's where you would claim it.
Okay, for Carthage, yeah, no, you're having some errors, I believe, when you're trying to file for your home office expenses. If there's specific codes you don't understand, please contact the support team. They may have to look at your return to help you
Yeah.
there. Okay, Terry, how to
Yes.
claim the digital news subscription tax on YouFile.
So that one again is on our YouTube page, by the way. We have an instructional video on our YouTube page which explains how to do it. But let me show it real quick,
Sure.
where you can claim it. So I'm just going to hide you for 2 seconds, and I'm going to share my screen again. So just give me 1 second here. Let's show it in the stream. Here we go. So in UFile, you're going to see a section called Other Deductions and Credits. Okay. So you simply click on that, Other Deductions and Credits, and then you'll notice in the section called Other Credits right here, you're going to see federal, whatever that line number is, digital news subscription expenses. Okay. So simply click on that plus sign, and now you'll be able to enter your fees. And again, we have this, what I just showed now, you could also view it on our YouTube page. We have a video on this as well. So let's hide this. Let's bring Ida back. And there she is.
Okay. The next question is Lynn. If I'm claiming travel expenses for several meetings, can they be grouped together, or do I need to enter each one separately?
If I'm claiming travel expenses for several meetings, can they be grouped together, or do I need to enter each one of them? Okay, if it's employment expenses, you could group them together. Or if it's a business as well, you could group them together. Yeah, the government does not see the detail of every single one of those trips, right? So if you're claiming it as an employment expense, in this case, then it's all lumped together. You could lump all of them together very simply.
Okay, next one is Joe.
Mm-hmm.
For a couple paying rent in Ontario, can I choose which return to record the annual rental amount? How do I add the Ontario benefit page? That's a
Okay.
trillium,
A
something
trillium,
like
I'm
that. Yeah.
assuming. Yeah.
Yeah.
For a couple paying rent in Ontario, can I choose which return to record the annual rental amount? If memory serves me, for the trillium amount, it's not a choice. I think it's could it be the lower or the higher income? Just give me 1 second. I'm just going to look that up. Trillium benefit. I know that ordinarily it is one spouse that has to claim it. About the benefit, just give me 1 second. Eligibility. Your eligibility also depends. Credit amount. If you're single, families could receive. How to get Ontario Ben form based on if you're enabled the last day. If you're married, it's paid to the person whose return is assessed first. Okay, so while the Ontario sales tax sales credit component of the Ontario is paid to the person who is assessed first, the Ontario Energy and Property Tax and Northern Energy Credit is paid to the person who applied for the credit by completing the ONBEN. Okay, so it's one of the two, and you could choose. Okay, perfect. All right, so for sales tax, it's whoever files first. For the other benefits of the trillion benefit, it would be your choice essentially. And now for the benefit itself. For the trillion benefit, I believe it's under the CRA questions that you will indicate this. Let me switch my client back to Ontario, and if I go to the CRA questions, climate action. Oh, maybe not. No, maybe it'll be Ontario tax and credits. That would make more sense. Yeah, there you go. Okay, so then what you're going to do is you're going to go to the section on the left-hand navigator called Ontario Tax and Credits. Okay, there's a section there on the left-hand navigator. Simply click on that, and on the page to the right, there's going to be the application for the trillion benefit where you can enter the rent. Again, you're going to choose which person is going to claim it, so you're going to have to put it in the file of the person you want to claim.
All right, let's go to the next question. Donna,
Mm-hmm.
how how to know how much I can use for the CDB benefit?
The Canada Disability Benefit, I'm assuming, which is the component of the Canada Child Benefit, I'm assuming, is a CDB benefit. How to know how much I can use for the CDB benefit? I'm not sure I understand the question, because the CDB is to my knowledge the Canada Disability Benefit, which is a component, a supplemental amount to the Canada Child Benefit, which if the child's disabled, you're getting an extra amount per month for the fact that the child is disabled. Donna, can you just clear up what you mean by CDB as an acronym? Because I that's what I know as a CDB benefit.
Yeah, she's talking
Um,
about disability.
Okay, so that one, the program will produce an estimate. By the way, so when you're completing your return with UFile, UFile is going to produce an estimate for the Canada Child Benefit. That's the one you look for. When you go to the Canada Child Benefit, you're going to see afterwards a supplemental calculation within that same form for the disability benefit. So that's where you're going to check, okay, to see how much you're going to get of the Canada Disability Benefit.
Okay, next question is from Serge.
Hmm.
I have foreign capital gain from selling some US stocks. They were
Hmm.
owned by myself and my wife. UFile does not provide an input panel that could be used to share portion of the foreign capital gain loss. Do you know why?
It's a good question. Let me just double check the capital gains 1 second. I believe you. I mean, as long as you haven't paid any tax on those on that transaction, you can simply enter them directly as capital gains instead of foreign income. That's one way to get around it, unless you pay tax on them. You know, if you pay tax on them, then you have to enter them in the foreign income. But if you did not, then in this case, what's called you can. Now, can I share it in the capital gains? No, I can't. Okay, yeah, no. Unfortunately, it's a limitation. Unfortunately, I mean, we'll convey it, Serge, to our programming team, but unfortunately, as of right now, I thought maybe in capital gains we'd be able to share it with a spouse, to transfer a portion with a spouse, like we do with business income and rental income. But unfortunately, it doesn't look like it. So we'll convey that to the programming team. We apologize, Serge, for the fact that it's not there.
Okay, next is Louise. How can I get rid of unused RASP contribution? I'm retired and got rid of all of my stocks.
I'm assuming it's RRSP. I'm assuming. Not I don't know what RRSP is, but how can I get rid of unused RRSP contributions? Basically, Louise, you use them. I mean, that's essentially what you would do. You would use them and deduct them on your tax return. That's essentially what you would do in this case. So yeah, as long as you got a limit within your RSP that you could use them, then simply go ahead and use them. Okay, that's the fastest way.
Okay, next
Yeah.
question, Sandra. Can't find box 105. My full-time university son got a scholarship from his university, but under pension and other incomes, and I can't find box 105 anywhere.
Okay, Sandra, and actually, Sandra, I think you gave me a really good idea for my next how-to video that I'm going to record, because yeah, we get that question a lot, and honestly, I'm surprised I didn't think about doing that sooner. Actually, doing a video on scholarship income. So let me show you. Okay, let me show you where to go. So I'm just going to go ahead and share the screen here. I'm going to hide Ida for 2 seconds, and we're going to go back. So the what's called the scholarship income is always on a T4A. Okay, so you would simply choose the T4A section and you would add T4A pension income right there. You would click on the plus sign. Then once you click on the plus sign, you go to the T4A annuity income here, that section. Okay, and then you'll notice you have a section called other information on the T4A. Okay, so it's within there. Click on the drop down menu and there's your 105. Okay, which unfortunately you're not seeing on my screen. I don't know why. I don't know why you're not seeing the drop down menu there on my screen. That's weird. But in this case, are you seeing it, Ida? I don't know. I'm not seeing it in the representation there. Yeah, but it's not showing the drop down menu items, which is weird. But anyways, there's a drop down menu there. Yeah. It could be. So you click on the 105. You know what? Hold on. I think I know what to do. 1 second. I'm gonna share my screen again. But this time I'm going to do the entire screen, and I'm going to share that right there. And now let's see if it does it. There you go. Now it does it. Okay. So from here, you go to 105. You see right there, 105 scholarship, and then you plug in your amount. Okay. And that's where you enter box 105. And thank you, Sandra. You just literally just gave me the idea of the next instructional video that I will do. Because yeah, that is a question we get often, unfortunately, and yeah, we should have that one.
Yeah, and actually we were working the FAQs on our website, and that was one of the questions I was working on and showing
Hmm.
how to get it.
Hmm.
So, okay, next question is from Min. Someone work at home at as mail carrier. Where would we enter the amount of gain? I'm
Someone
not
works at
sure.
home as a mail. I'm assuming mail
That's
carrier.
what I think. Mail
I'm
carrier.
assuming where to enter the gain. Min, can you give more details on that? I'm not quite sure what this person is doing. What do you mean by gain? Okay, let me just assume mail carrier. Amount of gain would be income. I'm assuming that this sounds like a business income in this case. If this person uh, is a an independent mail carrier in this case, I would assume it's what's called. It would be business income in that case. I'm assuming. Just a minute, if you could just confirm that I got it right. Okay, that I've interpreted your question right.
Okay, next one is from Ramesh.
Hmm.
Sorry. How do I get capital loss from prior years to be deducted equally from both my wife and myself carry forwards? I am always getting the total gains reduced from my losses on our notice of assessment.
Okay, how do I get the capital loss from prior years to be deducted equally for both? I'm always getting the total gains reduced for my losses. Well, Ramesh, it depends on whether this is a joint account or not. If this is not a joint account, you can't simply choose to transfer a capital loss to your spouse. Okay, that's the key there. Okay, if the losses were purely under an account that is purely under your name, you can't transfer that loss. You're the only one who could claim it. Okay, so that's why I think the CRA is basically claiming all the losses on your notice of assessments because you simply can't do it. You're not allowed to do it in this case. Okay, so that's what I would assume in this case. If not, you simply split the losses physically in half and you put in half the losses in your file, half the losses in your spouse's file, as long as it's a joint account. If it's not a joint account, though, then the losses only apply to you. That's how it works.
Okay, Cecil.
Mhm.
I transferred my overseas pension from the UK into my RSP in 2023. How do
Mhm.
I declare this 60J form in my taxes? Did not withdraw any of this income in
Okay.
2023.
Yeah, 60J is the article, is a subsection of the act that basically says you could transfer them directly with no tax consequence. Okay, that's what Cecil is meaning by 60J. Okay, that's actually the section in the act. You know that's the law itself. Okay, subparagraph 60J. So what you would do is ordinarily, the quickest way of doing it is just to pretend that you got a T4 RSP. Essentially, that's the quickest way of doing it. So let me just show you real quick what you would do. So in this case. So you go to the pension income section and just pretend that you got a T4 RSP. Okay, essentially, because that's really what it is. It's transferring to your RSP. So go add a T4 RSP slip. Okay, directly there. From there, enter the payment that you got under box 16, and then you enter the same amount under portion of box 16 transferred to an RSP, and that will trigger the transfer under subsection 60J of the act in the software. Okay, so again, T4 RSP slip, enter the income amount first, which would be box 16, and then over here under the portion of box 16 transfer to RSP, enter the exact same amount, and it'll be an in and out. Essentially, you'll see the amount in your total income, but then it'll be deducted directly in your net income. So there will be no tax consequence in that case. You won't be taxed on it, and there won't be any issue with your RSP limit because the amount of the transfer will artificially inflate your RSP limit to encompass that transfer. So you shouldn't have a problem in that case. Okay, so let's bring back Ida. And there she is.
So now we're going to Emma. How can I apply first home buyer amount prior year?
How do I apply first home buyer amount prior year? You have to adjust. Emma. If it was in the prior year, you didn't claim it, you have to do an adjustment. Now, the quickest way of doing it, you can't, in other words, you can't claim it in the current year. If you bought your home in 2022, okay, then you have to claim it for 2022, but you can adjust your 2022, even though you didn't declare it originally. The quickest way of doing it is going through the My Account portal of the CRA. Okay, that's the quickest way of doing it. Simply create the account, go in there, and there's an option within My Account to adjust your return. Okay, and to amend your return, go in there and make your claim. The other way you could do is through refiling. Okay, so you go back into UFile. If you filed using UFile, go back into UFile and then make the claim in your file, and then go back to the net file tab and then click the option for refiling, and then simply retransmit the return. Those are your two options that you could do.
Next question is from Peter. How to claim home expenses that are professional, not commission?
Okay, so home expenses that are professional, you choose salaried. So if you look at the beginning, of or that are professional, hold on, not commission. Okay, hold on. And then I'm assuming you're self-employed in this case. That's what I'm going to assume. So then when you're going to the self-employment section, okay, you're going to choose, well, actually, no, hold on. He could be, though, employed. Anyways, I'll talk about both. Okay, so if you're self-employed, you're going to choose the professional option of self-employed, and then you have home office expenses as an option in your left-hand navigator. Go in there and then make your claims. If you are an employee and you are salaried and not commission, then when you're going to, if you look at the beginning of this video, I showed the differences between the two. There are two options when it comes to employment expenses. You either choose commission or you choose salaried. So you're going to choose salaried in that case, and then you complete the home office expenses as salaried. And at that point, you're only going to get the options for salaried employee, not commissioning employee. Okay, and that's what you're going to claim.
Okay, next question from Sean. Where and how can I complete the applicable schedule to claim report participation as either a trustee or a
Yeah.
settler in a bear trust?
Okay, so for that one, you would have to use another product of ours, which is our professional product, which we sell as well under a limited licenses. So you can buy one or two of those returns. For that one, you have to do a T3 return. Okay, it's a trust return in this case, and not a personal return. Now, UFile does not produce a trust return. We produce personal and we produce corporate returns. However, we do have a professional division as well. Okay, where you can actually buy what's called our professional product, which is DT Max, and you can buy this product. Under a limited license, meaning that you could buy like one or two, a limited amount of returns. In that case, in order to declare the Bear Trust that you have to do now, starting in 2023. Okay, so we'll post the link directly.
I'll message him directly after.
Yeah, we'll message you directly so that you can inquire to see how to purchase that particular software.
Okay, next question is from Ravi. Murillo, I will give you the links after for the U file, don't for the YouTube channel. Don't worry.
Mhm.
T2125 self-employed. Where do I enter the premiums paid to a private health program?
Okay, so for self-employed, for that one would be, yeah, it's a good question. Let me have a look at the form itself on the T2125 itself. Just give me 1 second. I'm just going to the form, and I'll tell you in a second. Yeah, now remember, these are fees that you're paying under what's called for your self-employment business, right? For your private health program, right? Purely for your private insurance business. Okay, so this would be, I would put it as, okay, I would either put it as other expenses, or I would put it as business taxes, licenses. Yeah, it's not really a license in this case. It's not professional fees either. It could be management and administration fees. You could have it there, or you simply put it as an other expense. You would actually indicate it. You would actually list it. That would be essentially where you would indicate it. So we'll go to the next question.
Next question is Gabby. Is it worth it to do employment expenses if your office is part of your living room and not having too many expenses except the rent and internet?
Listen, Gabby, I think it's worth it because it's money you're entitled to. You know, what I mean, why would you not claim something that you're entitled to? I mean, I think I speak for all of us here that we pay enough taxes, right? When it comes to our lives in general, and when the government gives us this kind of break, I would suggest to use it. I would actually no, I would take it. It is worth doing. Now, what you have to do though, when it comes to your home office in a common area, is that you have to do two proration calculations. Number one, you have to determine your square footage of your living room versus the rest of your home, and then once you determine that, you multiply that by the percentage by the result that you get from dividing your work your the hours you work in a standard week divided by the total number of hours you work during the week, and then you multiply the two together, and that will determine your percentage of your home office vis-a-vis the rest of your home and what you're allowed to claim for your deductible expenses. Since you have rent, you can actually claim quite a bit. Okay, for rent, it becomes actually quite beneficial, even if it's 5% or 10%. Why not get that money back if you're entitled to it? To me, it's like like I said, we pay enough taxes in our lives. If the government gives us a break, take it. And try to do whatever you can to take it.
Okay, now the next question is from Nonna.
Okay.
I am using UFile. May I know how to report Ontario work benefits since I can't find Schedule 6 in the system?
Ontario work benefits. Yeah, I'm not sure what you mean, Nona, by that question with
Shouldn't
Schedule
that be in
6. We
the provincial credits?
we do have Schedule 6, but that's the Canada Workers Benefit, which the program computes automatically based on your working income. Um, I have a feeling that you want to claim the Ontario Workers Benefits as part of earned income for Schedule 6 for the Canada Workers Benefit. In this case, it's not the same. A worker benefit, I don't believe, would be considered as earned income for the purposes of the Canada Workers Benefit, and that's why you're not getting it. Now, it could also be that you're making too much income as well, because the Canada Workers Benefit, when you go above a certain threshold, you can no longer claim that credit, right? So in this case, you would have to check to see what the government considers as working income. And what the government considers as working income is, for example, employment income or other employment income, scholarships, self-employment income, and if you're a native on a reserve, exempt income from reserve, but that's about it. So if you're getting a workers' comp, in this case, that's not considered as working income for the purposes of the Canada Workers Benefit, and that's why you're not getting it. So you have to be eligible for it, and unfortunately, that type of income would not be eligible.
Okay, next question is from Kathy.
Okay.
I am doing the taxes for my son. I have a question about the home buyers program. I understand how to fill out this in the software.
Yeah.
However, do I just indicate the contribution from the RSP he is transferring? Do I still have to inform the bank?
I'm doing my. I have a question about home buyers program. I understand how to fill out the software. However, do I just indicate the contribution from the RSP he is transferring, or do I still have to inform the? No, you don't have to inform the bank. When you're making your repayments, which is the installments you have to make as starting the second year after the withdrawal. So you have 15 years basically to repay your RSP. You don't have to inform the bank. You inform the CRA is who you inform, and the way you inform them is by, if you look at the beginning of the video that I did, you inform them by designating the portion of your RSP contribution that you are paying back to the home buyers plan. You don't inform the bank. It doesn't matter to the bank at that point, but it does matter to the CRA. That's what you have to do.
Next question from Ash.
Mhm.
Can you repeat the vehicle allowance that can be claimed for salaries T4A on the T4 and for commissions T4A?
The vehicle allowance. Okay, so I guess that would be added to your. The vehicle allowance to your T4 would be employment income, so that's already included in your box 14. There's nothing else to really indicate in this case. What you could claim is maybe you might be able to claim your motor vehicle expenses under employment expenses as long as your employer has signed off on it on the conditions of employment that we call, which is the T2200 form. For commission income, it's the same concept. You're simply entering your vehicle expenses directly in there, and the allowance that you got might be taxable, which means you have to include it as business income. In that case, it depends on your scenario, whether you're employee or whether you are self-employed. It depends. Okay.
Next question is for Amy. Gerry, do you want to show us the FHSA how to report it when when you include eligible withdrawal?
Um, but how would you have an eligible withdrawal within the first year of the program? I mean, I find that very surprising. Found that based on my FHSA slip, which included an eligible withdrawal, the review in the end didn't give me. However, I tried different tax claiming website. It worked on their end. Seems like I'm just surprised you already have an eligible withdrawal within the first year of the program. I'm very
Actually,
surprised that.
I think she should send it to our
Mm,
support team for them to look at it. You probably
yeah,
did not enter something at the right place. That's
yeah,
what I
yeah,
think.
yeah. So yeah, check with them because that's we would have to look at your file basically to
Yeah,
really figure out what's
because I
going
do have
on.
a feeling something's not entered at the right place.
Yeah,
Okay, where to mention if I have kids under 18?
you add them as dependents. Very simply, that's what you do. So let me just go back to the software. Right here, oops, I'm actually showing the professional product. Here we go. Now I'm back in UFile. So you see here when you've got your file, you've got add a spouse and add a dependent. So you simply add a dependent. That's what you're doing. So you simply click on the tab that says add a dependent, and then from there you enter your information, your child's information within there, and you've essentially added your child that is less than 18. The program will make whatever claims can be made, including Canada Child Benefit, or if you're what's called a single parent, it will claim the eligible dependent amount automatically for you. Okay, so let's bring Ida back.
Next question from Durkee. RC 210, where is this figured entered in U file?
Okay, yeah. So for those of you who don't know what the RC210 is, it's the advance payment of the Canada Workers Benefit that I was mentioning before. So if you're a worker at a low that has low income, okay, you will get a refundable credit from the federal government called the Canada Workers Benefit. That's essentially what that is. So if you were eligible for the credit in 2022, the government has prepaid you or paid you in advance half of the credit in 2023 for your 2023 return. Okay, and they will send you an RC210 to indicate the payment that you got in advance, and then you have to reconcile whether you got overpaid or underpaid on your return. Okay, so that's what the RC210 is. So let me show you where you would indicate that RC210. It would be again. I'm going to go back to the software here. So I'm going to show in stream here right there. So you're going to have a section called Other Information Slips. This is by default within UFile in your left-hand navigator. So you go to Other Information Slips, and then you'll notice right there, there's your RC210. Okay, ready and waiting. So at that point, simply click on the plus sign next to that. So again, RC210. So Other Information Slips, RC210, and there are your box numbers. So let's bring Ida back and go to the next question.
Diana, can you please repeat the T4A? What does this have to do with expenses for salaried employee? Also, regarding the T200 form and the TP64, form to be filled by employee? Do these forms need to be filed in for a self-employed professional salaried employee?
Okay, well, it's so Diana, you can't have a self-employed professional salaried employee. It doesn't. It's you're either self-employed or you're salaried. Okay, well, one or the other. The T4A is essentially you might have gotten from one of your customers a T4A slip indicating an amount for services that you render to them. Okay, so for their own accounting purposes, they will produce T4A slips and send them to you in order for them to know where the expenses have gone. Okay, so this happens quite often. Okay, so again, what you would do within the software is within the T4A slip, you would have a box number here. Either it's box 20 or box 48, or it could also be in 28. It could also be as other income as well. Okay, so it could be that as well. Okay, so whatever you enter in there is considered self-employment income, which means within the self-employment section under income and expenses, you would have to repeat the entry under self-employment because it is self-employment income, and it has to be indicated as such. Now, once it's indicated as self-employment income, you can deduct expenses off that income. Okay, and that's the purpose of it, is that you could claim expenses for that income as well. Now, if you are a salaried employee, okay, that is different. A salaried employee is you have your salary, you could claim expenses off of that salary if you paid for expenses that your employer has not reimbursed you for. Now, the expenses you can claim are very limited when it's under employment expenses than if you are self-employed. When you're self-employed, you can claim quite a few expenses. Okay, the basic test is as long as the expense was incurred in order for you to gain income, then then more often than not you can claim expenses, and then you check the guides of the government to see whether those expenses have special rules to them. Okay, that's how it works. Now, when it comes to employment expenses, you really have to go to the guide and see which expenses are allowable. Okay, because now the government is much stricter when it comes to employees, and you have to basically check to see which expenses are allowable, which ones are not. Now, the forms that you're quoting is actually the T2200 and the TP64.3 in Quebec. These are the forms where the employers are signing off and allowing you to claim those expenses on your tax return, because they're confirming to both levels of government that you did have expenses that they did not reimburse you for, and therefore you can claim those expenses under employment expenses. Okay, that's the distinction between the two. All right, so I'm going to hide this. I'm going to bring back Ida, and let's do a few more questions because we're already
we're
at
at
time.
time, so we're not
Yeah.
taking any new questions. We'll try to filter whatever's here as much as we can. Can I still claim interest on student loans from previous years?
From previous year, the answer is yes, but you would have to adjust the previous year's return. So just like I mentioned with the other, just like I mentioned before, you either do it through the My Account portal, the CRA, which is the quickest way of doing it, or what you could do is you can also do a refile of the return, but you have to go to the previous return, make the changes on your previous file, go to the Net File tab, and then click on the refile option. And then at that point, you just resubmit. But it has to be an amendment of the previous year's return.
Danish, the closing date of my rental was January 4th, 2024. Can I include the sale capital gain for 2023 tax return?
No, if you sold the property in 2024, the gain is in 2024. You can't simply choose to put it in 2023. It depends what's the actual transaction date. That's really what you have to check. If the transaction date is 2024, it's 2024. If the transaction date was 2023, it's 2023.
Okay, Ravi, where do I deduct the application fees of $150 paid to each of McGill and Concordia? The kid is going to Concordia. The application fees, I don't think so. They're
No, they're not
deductible.
deductible usually. No, it's only the tuition fees that are deductible, not the application fees in this case.
Okay, Namir, how to claim caregiver amount only and not the disability amount?
Okay, Namir, it's a very good question. So what you would do is, let me show this real quick in the software. So what you would do is within the dependents file, when you go to medical and disability, okay, there's a medical disability section, again, in the dependents file, okay, the one that you are claiming. So you have to have a file for the dependent. So you go to medical disability, and then you go to infirmity and disability amounts for the dependent. When you click on that, you put in the infirmity that the child or the dependent has, and then you simply tell the program not to claim the disability amount. Okay, so at that point, you're still triggering the caregiver amount, because for caregiver, the test is that you need an infirmity, not necessarily a disability, right? So at that point, you simply tell the program not to claim disability amount, but you do have to indicate an infirmity. And once you've done that, the program will trigger the caregiver amount from that point on. All right, let's bring back Ida. All right, there she is.
Okay, Mia, paying to subscriptions and certifications without having a company or self-employed can still be claimed the expenses.
Okay, paying to subscription and certifications. Mia, it depends. If you're part of a professional order and you're paying for certifications, then that becomes a union due. That becomes a professional due, which means you claim it under the professional fees. Okay, and that you do that in the software under the employment section. I believe we have it there. So let me show you real quick. I'll highlight again. And from here, you'll notice when you're in the interview setup, you've got a section called Employment and Other Benefits. You see right there, you've got union or professional dues not on the T4. So you would tick that box, you would click Next, and then under Union Dues, you go over here and you click on Union or Professional Dues. Now, if you paid expenses for certifications, like for example, you had to do certain exams, okay, in order to continue, that would ordinarily be considered a tuition fee, okay, in that case. All right. But if it's subscription fees, which are usually fees that you pay to be part of a professional order, that would be a union due. That's where you would claim them. All right. So let's bring back Ida.
Okay, next question, Neil. Please do not add any more new questions. We're really out of time. So Neil, do I have to apply for CWB or the system automatically calculates if I qualify for it and get the money from the CRA?
It's automatic, Neil. So first of all, if you were eligible for it in 2022, if you had gotten it, first things first, the software will claim it automatically. If you're eligible for it, meaning you got the right type of income and you're below the income, the threshold, the eligibility thresholds, the program will simply claim it automatically. And then for the following year, you will get the advance pay, half the credit for the current year. You'll get it as an advance payment automatically by the CRA. There's nothing for you to do. The government will simply apply for you automatically.
Okay, Joy, can I claim medical expenses I purchased in the Caribbeans, my glasses and a body screening?
As long as you went to a medical practitioner to do these things, then you could claim it as medical expenses. But if you're going to just some place, some service like that, and it was not rendered by a medical practitioner, then the answer is no. So it really depends on who provided the service. Okay, so as long as it was done with a medical practitioner, the answer is yes.
Okay, next, where should I enter my professional training expenses?
Tuition fees. That's where you would enter them, as long as they're eligible. You would enter them as tuition fees.
Roya, I am hosting an international student. Do I have to claim the amount that I receive from the college? And if yes, where?
You're hosting an international student. Do I have to claim the amount that I receive? A lot of times, yes. It would probably be other income. That just stick it as other income. In this case, it's not really employment income. It's not self-employment income either, necessarily. So whatever you get ordinarily, I would say it would be other income.
Okay, Bonnie, can I claim caregiver amount and have the disability transferred from my son?
Okay, so if your son is eligible for disability, the answer is yes to both. You can claim the caregiver amount for your son, and you could claim the disability transfer from your son as well. Absolutely. As long as your son is eligible for the disability tax credit, which means that they've been certified by a medical practitioner to be disabled and they've been acknowledged by the CRA to be disabled. Okay, so that's the key in that case.
Okay, Stephen, if working on contract through employment agency, billing hours, would that fall as a salaried employee for home office? It's not commission, but not yearly salary either.
If working on a contract through employee agency, billing hourly, yeah, as long as you don't collect commission income, because ordinarily you would be. Oh, through the employment agency. Okay, I see. So you're not like a headhunter kind of thing. It's the employment agency that's finding you jobs along the
You're
way. Then
getting a
yes,
T4 from the
yeah,
agency,
you would get a
correct?
T4. Yeah, you would get a T4 from the agency, and you would be considered a salaried employee. Yeah, that's what would happen.
Okay, Yvette, I'm a volunteer for Revenue Canada. I have a mother who has an adult disabled son. The son does not live with her, and she is not the caregiver, but he wants to transfer his disability credit to his mother, and Revenue Canada tells me it is eligible. How does she do that without putting him as a dependent? Because if we do that, the program will calculate the dependent amount as well, and we don't want
You
that.
want that? Okay, so under the dependent, yeah, no, you still have to add them as a dependent, but under the controls, you would tell the program. Let me hold on. Let me put the child as the right age in my file. There is a way to tell the program not to claim the eligible dependent amount, and that's what you would do. Essentially, that's what you would have to do in this case. And I think it's under controls. Do you wish if treated Max Mike, do you wish to designate a child yeah, how to claim the candidate caregiver amount? Do not claim. Treat as a dependent. Yeah, there you go. So what you would do is in the dependent section, you would have a section called controls. It's towards the bottom of their left hand navigator. Click on that, and there's a question. Let me just show you real quick. Um, so right now I'm in the dependents file, okay, and you see I'm on this controls section right here. So over here you're going to see should this person be treated as a dependent by the program? You're going to say no. Okay, and at that point, the program should disable the eligible dependent amount, but still claim the other transfers in this case. Let's do about one or two more questions, Ida, and then we'll answer, I guess, directly on in the chat. Right?
Yes.
We'll do it that way.
Jason, is there an amount we can claim for work from home expenses for 2023? I work from home 2 days per week only. I live in Montreal.
Yeah. Well, listen, the what they call the
Flat rate?
flat rate method is gone. Okay, so you cannot claim the flat rate method anymore. You can only claim the expenses. The issue that you have is that you don't meet the basic criteria for home office expenses, which is that you work more than 50% of the time at home. Okay, for your employers. So unfortunately, you don't meet the basic criteria. So at least in my estimation, you would not be eligible for the home office expenses in this case, because again, that's the basic criteria to claim home office is that you work more than 50% of the time from your home, and chances are your employer will not will not give you conditions of employment because of that.
And to answer your second question, Jason, about the prescriptions not covered by insurance, yes, you could put them as medical expenses, whatever portion is not covered.
Yeah,
Uh, Nazrul, based on review of my 2021 tax return, RSP contribution, I just got express notice of a reassessment. It now
yeah,
says I have unused RSP contributions available for deduction for 2024. Is 11,300.
yeah.
Where would I put this in new file?
So again, that was on I showed that at the beginning of the video, but let me just show it again real quick. So right here, when you go to the RSP section, okay, when you go to the RSP contributions and limits section, all right, you'll notice right here you've got the entry for unused contributions for prior years. So just plug it in there, you 11,300, and the program will apply it. And again, I went into detail on how to enter these things in the software at the beginning of the video. So go back to the beginning when the recording will be put on, and you'll see it there.
Okay. Huda, for the dependent under 12 years, do I skip all the boxes relating to income or just put zero amount? I think there's a place you say that the child has no
Yeah,
income.
yeah, it's in the beginning. It's in the identification of the child. So when you're entering the name and the SIN and the date of birth and everything, the program's going to ask you whether there's any income there. Simply say no. Okay, simply say there is no income for this child. Let me just double check that I said that correctly. Oh no, that's actually for requiring a return. Sorry. In the interview setup, you're going to say no income. Basically, you're going to say no, there's no income there. That's essentially we're going to do it. Okay.
Stephen, is there an ACB calculator for ETFs held in non-registered accounts?
No, we don't have an ACB calculator. No, there's no tool like that in the software. At least to my knowledge, we have an RSP calculator, I believe, a retirement planner as well. But that's it. We don't have an ACB calculator, unfortunately.
Louise, I have unused RSP contributions. I'm retired and have sold my entire portfolio of stock.
Oh, no, I already answered that one. I already
Yeah,
answered
but I
that one.
think I understand what she means. If she's contributed, it didn't take a deduction.
Yeah,
She still can use that deduction.
yeah, that's exactly what I answered. That's
Okay.
exactly what I
And
said. Is that if there's anything that left over, the best way to get rid of it is to claim it. Claim it as a deduction on your return, as long as you've got the limit to do it. That's all. That's all you do.
yeah, and if she has unused room, well, there's nothing you could do about that.
Yeah,
So, Tyson, my wife has a home-based business and claims home office expenses, including a percentage of the
yeah.
house. I work from home as well. Can we both claim a percentage of the home for from home expenses?
The answer, yes, but the thing is, you're probably in two different rooms, right? So you would have to recompute what your percentage is and what your spouse's percentage is. So you'd have to do a different calculation for each one.
Ron, can I still claim as a deduction the interest on the student loan from previous year? Yeah, we did.
Yeah,
Not a
we already
student.
did
Yeah,
that one.
we answered that one.
So
Andre, thank you. Shout out to you.
yeah,
Uh,
yeah, yeah. Nice seeing you again, Andre. Nice seeing you there.
defrost any chart. Defrost. Did we answer him? Any other changes? How I report the expenses for care receiver in the case when they move to a private residence and a CHSLD? Did we answer
Okay,
that
yeah,
one?
yeah, yeah, yeah. I answered, but I think he's adding stuff to it. Any other changes? How I report the expenses for the care received in the case when she moved in the residence, probably at the federal level. Anything else change? No, you can't because you can't claim whatever you're providing extra because it's a 24-hour place, right? So that's not something that you could deduct, unfortunately. The government assumes that they have everything they need in the CHSLD. So that's why you can't claim more than that.
Wendy is asking, can you designate unused RSPs as a home buyer plan?
No, no, that you cannot do. No, you could only designate current year contributions. Actually, sorry. No, I'm wrong. You could only from the unused amounts, you could only designate the first 60 days of the current year as part of your home buyer's plan repayment. Meaning that, okay, and that's why the program asks you for that in the RSP section. Meaning that basically what you can designate as a repayment to your home buyer's plan is the full calendar year contributions of 2023 and the first 60 days of 2024. That's what you're allowed. Okay. Anything that's unused past the first 60 days of 2023 is not allowable. Okay. That's how it works.
Okay.
One
Marcia,
more.
last
Yeah.
we'll take two because
Okay.
okay. Marcia, last week I completed and submitted a return for low income pensioner, self-employed commission. Her refund was higher than indicated on new file return because of the Canada Workers Benefit. Is there a box that I should have checked?
Last week I completed submitted return for low income pensioner. Her refund was higher than indicated because the Canada Workers Benefit. Is there any box I should? No, that means Marcia. Chances are this person this person had self-employed commissions. I mean, did you declare the self-employed commissions? That's the question because the program will generate the Canada Workers Benefit automatically based on the entries that you make as long as they got eligible income, which means employment or self-employment income. I'm thinking here that maybe the self-employment income was not in the return, and the government. Well, no, how would the government know if it was self-employed, right? That means that she must have had employment income as well. That's the only thing I could explain as to why you had differences between UFAL and what's called and what the government assessed is that they must have had a T4 slip in their data bank that you didn't have on the return. Otherwise, you'd have to check with us. You have to send an email to our support staff so they could check it because without seeing the return, I can't. I'm only speculating at this point.
Compare the return with the notice of assessment. They gave you the
Yeah,
lines where they changed.
and chances are there's going to be an employment income there that you did not have in hand. And it's not necessarily your fault. It could be that the person, what's called that the person that you're producing the return for, it simply didn't give it to you. So that's what it is.
Okay, Mary, money was withdrawn from a TFSA account, but no taxes were withheld at withdrawal. How do I enter this on my return?
Well, good news, Mary. There's nothing to include because it's tax free. That's
I wanted to
and the
finish on
name
a good
says it.
note.
Yeah, exactly. And that's the name. Remember, TFSA means tax free savings account, which means any withdrawal you make from it is tax free, so you don't declare it on your return. It's entirely tax free.
Okay, we're over the time, so we'll stop here. We'll go back in and answer the people we haven't answered. We
Hmm.
will provide you the links to the YouTube page and any other things like that. So this is concludes our Facebook Live for today. Thank you very much, Gerry. Let us know how you like the session, and we'll see you next time.
Yeah. Thank
All
you.
right.
Thank you very much,
Thank you.
everybody. All right. Take care.